I grew up on the U.S. yield curve because when I went from MIT, where we both graduated, I went straight to Wall Street, and I was trading fixed income derivatives. So I grew up on 3% overnight rates, 6% long rates. I traded a swap book that traded as a premium on top of that for interbank rates. And it pretty much stayed around there for the next 10 years. Okay. There's a couple times we had a flat curve. I think the bond yield got up to 8% maybe. But there wasn't QE back then, and it behaved like it traditionally behaved. What you just said boggles my mind, that a 2-year note could go from 16 bips to 390. That's just, the beauty of the fixed
in 50 weeks.
That's crazy.
I mean, 50 weeks.
And this, it's such a massive market for people that don't know. It's so big, and that's why it usually doesn't move much, and it can still move markets. And now it's all over the place. Like you said, we used to believe that the Fed had some control over the economy. Now it's not obvious that they have any control, or that what they do helps the economy. And yeah, it's a good point. If you go back to MIT right now and take an economics class and raise your hand and say, is that really true what's in this textbook that's 5 years ago? Your professor, can he look at you with a straight face and say, yes? I don't know. Be worth of us doing that, maybe, to go back to Sloan School and say, do you really think that's true? And would they have a discussion about Bitcoin? I don't know. Maybe they would. Michael, I think it's important for people to hear your background, because you said, Bitcoin was, created kind of out of the financial crisis in '08, and you might not have cared about it unless you had faced a currency collapse. If you hadn't have watched what happened in March of 2020, would we be sitting here talking about Bitcoin? Would you have 130,000 on your balance sheet? If that had never happened, would you have noticed it?
No.
Right.
Well, here's what I would do. I sort of notice it's some techie thing that's interesting, and it's in the category of, do I want to invest in some startup or some Instagram competitor or Snapchat or Uber or Bitcoin or Airbnb or WeWork. It's just another thing that may or may not work that I'm not paying that much attention to. I think that if you I did have a business in Argentina, and I watched a currency collapse in Argentina where we lost nearly everything. Like, we lost all of our profits for a decade. And overnight, we had all our money in a bank, and it was in dollars. It was an American bank in Argentina.
Really?
And the American bank sealed itself. The government sent an edict to the bank. The bank converted our dollars into pesos at $1 per peso. And then the next day devalued the peso 10 for 1. And we lost 90% of our money in one day. And in an American bank holding in dollars. And luckily for us, it was a small part of our business. So it's kind of like someone just chopped one of your fingers off, but they didn't chop your head off. Now, if you'd lived in Argentina and you had 100% of your business or your assets in Argentina on that same day, you didn't, lose 1%, you lost 90% of everything. So I kind of knew intellectually that this could be useful, but it wasn't a visceral near-death mortality facing event, right? You don't really get religion until someone says, next Monday, everything you've got, I'm taking it all if you stay here, right? And so when you have that kind of come to Jesus moment, then you get religion. So I think that for us, our come to Jesus moment was March of 2020. And it's just, we got to the end of the line where I'd spent a decade trying to use conventional models and conventional techniques, use treasury bonds as a treasury asset and do stock buybacks and just work harder. Right. You work harder and you use conventional techniques, but you're making no progress and you're just getting beat to death. And I mean, at that point, I wasn't looking at, we still didn't have the Sri Lanka, Argentina, Zimbabwe type situation where your money is losing value at the rate of, I think 90% of the value drains out of the Venezuelan bolivar every year, right? It wasn't that bad, but I think that in 2020, I realized the half-life of money, the half-life of energy or wealth stored in the currency was 36 to 48 months. So I looked at $500 million and I said, $500 million stored in US dollars at a 15 to 20% monetary inflation rate, divide 20% into 70, right? The rule is 70, and you'll think, okay, got 3.5 years and half of it's gone. So I think I got to that point. And the significance of that for me, Brian, was I realized at that point that holding 500 million in cash at a 15% monetary inflation rate means that you lose 75 million a year on your balance sheet. And the best I could hope for is 2,000 people working themselves to death, doing 100,000 things right every year, everywhere in the world. And if we didn't screw up anything, and if everybody worked themselves to the bone, we could make 75 million.
Right.
So I had this inflection point where I realized everything we're going to do for the rest of our lives is going to be negated by the inflation on our balance sheet. And that's the point of hope, despair, and indifference, where you're like, it just doesn't matter what we do for the next decade because we can't get ahead. Now, that's a slow death. Right. I've used the phrase, right? The road to serfdom is working exponentially harder for a currency growing exponentially weaker. Just a road to serfdom. That's a slow death. But, if you took yourself and you dropped yourself into Venezuela or Zimbabwe, and I just told you, or Argentina, it's the same idea, but instead of a slow death, it's just a fast death, right? You might as well just open up a vein and let the blood drain out. Right? It's not like giving a pint of blood a week. It's like giving a pint of blood a day, or I just open up the vein and I just bleed out, right? I mean, that's what hyperinflation is. So I would say we were jarred out of our liturgy, or jarred out of our conventional thinking because of that crisis. And then we had a couple of advantages. One, we had a huge balance sheet. And so if you were running on 500 million in debt instead of 500 million in equity, right? When you're running on 500 million of equity at 15% monetary inflation, it costs you 75 million a year. But when you're running on 500 million in debt, you're actually getting 75 million a year. So you see,
right.
If you're an indebted company, you wouldn't be as sensitized to that. So we happen to have a lot of cash. We had positive working capital, and then we had a company with a fairly tight board, 5 people. We knew each other, and a very smart, engaged executive team and engaged board. And I'm the controlling shareholder of the company, so we didn't have to worry that we would have some hostile takeover activists that would just immediately target us if we were to get outside of the conventional bounds. And so we had sort of not much to lose. We had something to gain. And our option was a fast death. We give the 500 million back to the shareholders, and we just get beat to death by Microsoft and Oracle, or a slow death. We keep the 500 million, but we just gradually get whittled down at 50 to 100 million a year.
Hey, it's Brian Rose, founder of the DeFi Academy. I've told you my 4-week crypto bootcamp is amazing, but don't take my word for it. This is what my students are saying.
The DeFi Academy was an amazing experience for me. It took me totally out of my comfort zone.
In this course, I was challenged, I was held accountable, and pushed to do things that honestly weren't always easy.
It's been phenomenal, and I can't believe we're already up on our 4 weeks. It has flown by.
Going through this DeFi accelerator by far was one of the best courses I've taken.
You do this course, you really get into the nitty-gritty of the activities that will make you comfortable with decentralized finance.
Thank you so much to Brian and everyone at London Real and the DeFi Academy for even putting together an amazing course like this.
Anybody else that wants to do it, please sign up. It is well worth the money.